Good morning. I wanted to run you guys through this financial model template. You're welcome to use this or one of your own creation. This one's pretty simple. It only allows you to use 3 products, but it gives you, I think, an idea of how you put these models together. I'm going to pretend like I'm opening a coffee shop. I'm going to start it in 2019. And step 2, I'm going to offer 3 products: a coffee, muffin, and a smoothie. Obviously, if you're doing something more complicated, you can either add products. I'll show you where to do that, or you can kind of put them all together into a lump somewhere. But at this point, so that you basically name your products, and then you go to the revenues tab, and you put down on the revenues tab the number of units sold. Here are your 3 products. We're going to sell 20,000 cups of coffee in the first year, 40,000 the second year, etc. We're going to sell the same number of muffins and the same number of smoothies throughout the growth of this business. We're going to charge $4 for a cup of coffee every year, $6 for a muffin, and $8 for a smoothie every year. And so that simple chart basically generates your total revenues each year, growing from 360,000 up to 1.8 million. If you want to add products, you basically would add them here, same units, and then just make sure that the total revenues reflect whatever you've added. When you look at this 360 going up to 1.8, if you look at the income statement, you'll see that those numbers are reflected there. Okay, then you head down to step 3, which is the cost of goods sold. Go to this cost of goods tab for each year, enter the material cost of each product, and then go to the production labor tab. So we'll go to the cost of goods sold tab, and again you see the same thing: 3 products, how much does it cost per unit, and the total COGS for each one. So its cost, I put down the coffee has a cost of goods sold of $1. The cost of goods sold would be the grounds, the water, whatever else goes into the actual coffee. The muffins, I'm saying, will have $3 of costs, and the smoothies $4. And then we need to go to the production labor costs. And here you have an opportunity. This is how many people are you going to hire to make this stuff. And I just made this up. And I said, well, I'm going to hire a manager. You can call that person whatever you want. And I'm going to have 4 people that work in my shop full-time. And again, you may want to adjust that or not. If you want to add one just because you want to add one, there's 5 people. And that's your total cost of labor. If you pay them benefits at 30% of salaries, which is something you can change up front. That's usually about right when you look at taxes and benefits and insurance and all that stuff. And if you go back, it will calculate the production labor here and then your total cost of goods here. And so again, if you go back to the income statement, the cost of goods sold, you have a gross profit which is calculated. You don't want to mess with that, which is calculated by subtracting the cost of goods from the revenues. Okay, next we go to the administrative costs. Go to that tab, and here you can fill in the number of people that you would need to hire. We'll call you or me the president. Here's what I'm going to pay myself. I'm going to hire a part-time bookkeeper to do the payroll and things like that. I'm going to look at my office rent, my utilities, my insurance, phone and internet. We'll put in, a couple $100 a month for office supplies. Please remember that these are annual numbers. We're not doing monthly. And then we just have a little bit of a slush fund here, undetermined stuff that you think you're going to need to spend. Step 5 is you go to the marketing tab, and you basically can decide if you want to hire anybody in marketing or customer service. For coffee shop, you're probably fine. You're going to do some advertising. You're going to do a website. Not going to do any travel or publications. But here's a little bit of a slush fund, so you have a certain amount of money set aside for marketing and other public relations or other marketing type activities. Capital expense, we're going to assume that it's going to cost $100,000 to get the shop outfitted. And then we don't need to really any capital expense after that. This is the espresso machines and the whatever other machinery. We're going to put in $100,000 of equity. We're going to get a $100,000 loan with we'll call it a 7-year amortization rate. If you scroll over, then you'll see those numbers reflected in the model. Here's an amortization table, and then the capital investment, which is then depreciated over time. And actually, at that point, you're done. You can put in less salary increases if you want. Benefits you can increase, and the tax rate is what it is, I guess, for the moment. And basically, the 3 key charts are your income statement. And if you look at this income statement, it tells you that you lost money in the first year of $183,000. And again, you might want to go back and, on the one hand, that may be fine because that's kind of what happens in these companies. And then over time, it gets better until by year 5, you're actually doing pretty darn well. Your balance sheet reflects that, and particularly in your equity, total equity growth. And this is a very important, the cash flow statement, which shows that in fact, in the first year, you're going to be and first and second year, you're going to be $100,000 short. So you either need to go back to your inputs table and put in a little more cash, maybe get a little bit bigger loan. Whoops, that would be a lot of loan. A little bit bigger loan, and then your cash flow statement looks like it can be handled. But that's exactly why you do this, is to figure out where the pinches are going to be. And maybe in the first year you need to hire less people and run a little leaner. Those are the kind of trade-offs that you have to make. So that's it. That's the model. It's not very complicated. I've kept it very simple. If you're good at these types of models and you want to do something a little more robust, you're welcome to. Understand that having only 3 products is pretty limiting, but just you can add if you want. Basically, you would come to the revenues table, you'd insert some rows, and you would basically copy this to there, and you would add whatever product you want, donuts, and you'd have to update this to include the donuts, etc. Okay? And then you'd have to go to your cost of goods sold page and do the same thing to make sure that everything tracked. Okay, so that's at least a start. I hope that's helpful, and we'll look forward to seeing your businesses.